Levi, lead us in the pledge.
I pledge allegiance to the flag of the United States and to the republic which stands, nation under God, indivisible, with liberty and justice for all.
There a motion to approve the minutes from December 11th.
So move.
Any discussion? All in favor?
Aye.
Opposed? Motion carries. Joe, operation.
Okay, good morning, Governor, members of the board. I'll go through, I'll go through my operations section here. Won't take too long. If you go to page 2, my commissioner's report. I did a media interview with the Open Range television program on Beck TV on December 17th. It's also on the website, so people can watch it anytime. I think it was good, educational, covered a lot of topics, and I think hopefully provides some good information for the public. So it was, I think it was a good thing to do, try to get the word out there about the things that we're doing here with the landlord and the Department of Trust Lands. So in mid-January, Service Director Joseph Stegmiller and myself went up to DC, had some meetings with the congressional delegation, committee staff members about the Trust Lands Completion Act. As you recall, that did pass the Senate at the end of 24. Stalled in the House in 25 with all the crazy things. We know what happened in 25 in Congress and in both the House and the Senate. Our delegation has reintroduced it, so we're just working with them to try to build some momentum back up for passage. So
Can you give me a 60-second overview as the new guy I meant to ask when we were doing my onboarding, but what will that accomplish for us?
sure, it will allow us to propose exchanges with the federal government for land within tribal reservations that maybe isn't productive as we'd want it to be.
Sure.
With other federal lands or mineral rights within the state. So we would propose a trade to the interior, and then
This would enable the trading to negotiate. Right now, we
Well,
can't even engage in
right,
that
we would
process.
propose a trade and through process with appraisals and everything, to make sure there's equal value,
Sure.
and then if it's approved by interior, it would go through.
Problem historically has been federal government only cares about acreage. Doesn't matter what value one piece of land is versus another piece of land. Doesn't
Square
matter.
feet of dirt.
Doesn't matter if Spirit Lake or Turtle Mountain wants more contiguous use of land. They only care about acreage instead of overall synergy.
Sure. Helpful, thank you.
Yep, no problem. State Investment Board, January 16th. I'm sure everybody heard about that meeting, where we had the vote on the compensation package so I was there at that meeting along with the governor and treasurer. National Association of Trade State Trust Lands. This is the National Organization for State Trust Lands. As you recall, we're hosting the 2026 conference in Medora, July 12th through the 15th. Put it on your calendars. We'll be sending out information if any of you want to plan to join us for a part of that. We're really working hard on that. We're developing a good agenda. We have a lot of speakers finalized. We have some that we're still working on, and we're hoping to open an early registration in February, or maybe push out to March a little bit sometime. But yeah, so that's going really good, and we're excited for that. Any questions on the commissioner's report before we move on?
Yeah.
All right, on the financial dashboard, first page, Common Schools Trust Fund, end of October, $8.4 billion. Another record. Just keep hitting new records. That's up 1.13 billion from year over year of balance of about $7.3 billion. And then if you go down, you can see the percentage of the state funding share still is around 24%. That the Common Schools Trust Fund distributions produce. We're going to, again, a refresher, we're going to send out about $600 million from that fund over this biennium.
Is that defined as a percentage of market value or sort of earnings in arrears, or what's our sort of formula to determine the distribution?
So it's in Article 9 of the Constitution.
Okay.
And it is 10%. We have to send out 10% each biennium of the rolling 5-year average value.
As a 10% of 5 years. Okay.
Yeah, 5-year average value. Yep. Page 5, you can see the Common Schools Trust Fund revenues. If you go to the end, the 1031, the investment performance is doing great. That's the green line there. We're already trending similar to, or even, yeah, probably about similar to last fiscal year, which is a really good year. So we're trending really well through October. If we go on to the next page, page 6, this is the SIF fund overview. We've added a little bit of context here. Provided a little more detail. So if you look at October, balance was at 1.18 billion. And if you read through some of the text there, basically what we do is we have a committed fund balance that we withhold from the available balance for litigation that's outstanding. And that's the board reviews that every year and approves it. That's at $43 million. And then we had calculated about $1.1 billion in outstanding obligations from appropriations by the legislature. So we estimated to be around $34 million available at the end of October. So and that's going to be like other bienniums where that fund grows and then it's spent down. So if you look to the next couple pages, you can see that on page 8, the waterfall for SIF is going to be much different this year. So we won't start getting the tax allocation until all the other buckets fill up, but we will continue to get the royalty revenue from the sovereign lands that's SIF fund. So
if I'm not, we took a glance at it, and based off of the first 4 months, 5 months of the deposits we've made into collected, if that average continued, I think the first deposit going into SIF wouldn't be until January, February 27. Yeah, based on those waterfalls. Yeah.
It's just one bucket. It's last now, right?
Mm-hmm.
yeah. All right. Any questions? Oh, and then the last page is our total assets were.
I do have a question. When you're saying deposits, as of when?
In terms of the,
Like,
so because we do a 1 month.
so oil production was up in November. We just got November stuff.
Yes, but
So
we
your deposits are, when did you?
we would have made that one in January because
Okay.
the
So
production.
you're 2 months ahead.
Yeah, so
Okay,
that's production.
that's all.
If we look to page 9, this is our total assets with the mineral value updated and the increasing growth of the portfolio. We're still at just under $12 billion. So we'll probably hit that here in the next month or two, I'm assuming, with the growth of the siting. Any questions before we move on to the division reports?
Surface.
Okay, surface. Real quick, we did process quite a few right-of-ways, but they were smaller ones. We processed 12, generated about 52,000, and that's just, we never know. Some are going to be small, local electrical lines that, bring in $5,000-10,000. Some are going to be a big well pad that brings in a lot more, so we just never know. But still good activity there. And a great photo from our Kayla on the surface team, Grant County. We look to the next page, 11. These are royalties that we've collected. You can see that what came in December, which is October gas, November oil production, was pretty similar to the last several months, right in the mid $30 million. If you look at the year over year, we're trending just a little behind, 211 million versus 224, so pretty comparable. Which on the next page, 12, you can see is we've maintained a good volume and increased the volume a little bit, even though price has gone down. So that's kind of what's been keeping us steady there. I see that oil's perked up a little bit in the last week here, so that's good for the revenue coming in too. So, and then unclaimed property, we paid out 874 claims in December, totaling 1.3 million. So a good, really strong month. If you look at our kind of comparisons over the last several months, received 105 holder reports, $1.6 million. Again, that's holder reports spike in October, each year and are just kind of trickling in because October is the big deadline. And then a fun fact that Susan, our unclaimed property director, wanted to share is that we actually there's a statutory provision that allows the high intensity enforcement unit of Health and Human Services to intercept child support arrearages through if there's anyone that has unclaimed property. So in 2025, we worked with them to provide $139,000 for those child support arrearages. So
I know that our office was just working with Susan or talking with Susan about getting prepped for some additional proactive letters going out here next month in timing with February. There's always unclaimed property month, or there's unclaimed property day in February. And so there's always a big media blitz. Good Morning America usually runs some segments. So we see massive influx of people. It's why the claims paid always spikes here in March because of all the requests coming in February. And so the team is working to proactively get ahead of that, get a bunch of letters, do some proactive send out to some folks with the checks to then follow up here in March. So I know we're working with.
We have a pretty big batch. I said,
I think it's 5,000.
Well, I said, do you want us to share? And she said, I kind of want to wait until next month. So we have the numbers finally.
Yeah,
we got a big batch going out. So
a few thousand checks will be going.
Yep. So that's good. That's the proactive one where we're just trying to get it out without having them come and file the claim. If we can match who they are with the identity and we send a confirmation letter, we can just send the check out directly. So
my national association is having another meeting with the White House next, about 3 weeks from now, trying to push and get the Department of Labor federally to act on the state unclaimed retirement clearinghouse to deal with all the ERISA backed 401k plans. So this is something we've been working on for a couple of years. The Fidelities of the world, et cetera, they have accounts from people that had a 401k in their 20s, lost track of it. Now they're aged out to the point where those accounts are required to make minimum distributions out of it. So these companies are cutting checks to just sit out there floating, and they have no way of turning that over to unclaimed property because the federal government preempts that. So we're working to try to get Department of Labor to change the rules so that we can have those run through unclaimed property accounts. It's billions of dollars of RMD checks out there nationally, and so hoping to get some more progress on that. The White House has been positive with this so far.
Wow. Levi, so much money they're losing track of.
They just print more.
all right. If there are no questions, we'll go on to investments. I'll ask Frank, our Chief Investment Officer, Frank Mihail, to stop on up and provide the report and then introduce after that the guest of the guest.
Thanks, gentlemen, on land board. I have with me today Garrett Stolchek from IDR Investment Management. Also have Josh Keevan from RBK dialing in. So we'll both of them in just a few minutes, but I'll get started with the performance and portfolio update on slide 14. As Joe mentioned earlier, continue to climb to new highs, 8.7 billion in the investable assets in the portfolio as of December 31. On the next slide, 15 shows our actual versus target weights. And so if you can see on the bottom right of that graph, international equity was slightly overweight, U.S. equity slightly underweight, closing out the year. Since then, we did rebalance those and get them closer to target, just to start fresh in the new year.
Was that due to, I know international had some pretty strong outperformance of the broader market in the fourth quarter. I'm guessing that's what comes.
International.
Yeah. And other than that, we're overweight in public credit. And the way we view that is that's our most liquid pool, and we'll be using that to fund the capital calls into private markets as we deploy more into private equity and infrastructure. We'll tap that liquid bond portfolio on those capital calls. On the next slide is the flash performance report. So great calendar year, 13.6% And yeah, 37.7 from the international book, leading the charge. All asset classes, including real estate, delivered positive returns this calendar year. So
Well, it's that kind of outperformance that when we have legislation that requires, complete divestment of international holdings or whatever that we occasionally have, this is the benefit of a diversified portfolio is you can get that outperformance from these markets too.
that's right. And no big changes on the next two slides with regards to unfunded commitments, and liquidity waterfall. Any questions on the dashboards? Well, I'll hand it over to Josh Keevan from RBK, who can go over the investment memo for today's. Well, actually, sorry. Let me give you a little preview before I hand it over to Josh. So today's recommendation is if some of you who were here in 2023 remember, we made a recommendation to IDR Investment Management. They are a fund of funds manager that tracks our benchmark, the Odyssey. And the account value is about half the real estate portfolio, sitting at about 386 million. And what that accomplished was it diversified the portfolio and it made it more liquid. Today, what we want to do is make a tweak to that investment mandate to allow them to tactically use leverage in the account. And so we've got some slides that show like stress testing and risk mitigation around that. But right now, our real estate portfolio is on the lowest end of the risk curve, all in core assets, meaning like fully stabilized real estate. And so this mandate will allow IDR to toggle between levered and the unlevered share class, depending on the market. What that means is if we hire them today, they won't turn it on right away. They're waiting for the market to look accretive. Likely today, we're not really there yet with borrowing rates and cap rates on real estate, still sort of at a break even. But if we go into a real estate bull market, then they'll be able to turn that on. And so I'll hand it over to Josh Keevan from RBK, and he can get into a little more detail.
Great. Thank you, Frank. Good morning, Governor, members of the board. You'll find in here our diligence memo, which supports the recommendation to make this change to the investment strategy that you have deployed with IDR. But I would really want to sort of at a high level summarize this as a moderate enhancement to an investment strategy that you've already underwritten and have successfully working in your portfolio. It's designed to increase returns, to allow IDR to use some financial leverage to their fund when it's deemed accretive to do so. It does come with some risk. Obviously, financial leverage introduces risk, and this is leverage on top of leverage that is deployed in the underlying funds that IDR deploys. But when we look at the combination of expected return, risk, and fees, we actually think this makes a lot of sense in your portfolio, and that the risk is it's there, but there isn't return without risk. And so you do have to make choices about how you take risks to enhance returns. And this seems to have a favorable payoff relative to the alternatives we see, especially on a net of fees basis. And what I mean by that is Frank talked about this is core real estate. So the IDR core portfolio is a collection of core real estate funds in the U.S. that you are broadly allocated to. And core real estate is generally, as Frank noted, the low end of the risk spectrum for real estate. It's also the low end of the return spectrum, but it's the low end of the risk spectrum. These are really diversified portfolios of well-leased properties, and most of your return is coming from just collecting income. And if you want to think about like how do you increase returns on that, you've kind of got two choices. You can increase risk by virtue of the types of properties or types of strategies you're investing in. That would be going out into more speculative types of investment strategies, or you can increase the financial leverage. The problem that we see there's a couple problems with going out into different parts of the risk spectrum in real estate. This would be moving out into closed-end investment in more value add or even opportunistic strategies. The challenge is, number one, it's harder to get that money to work. You end up with more uncalled capital that you've got to take some time and serious commitment to get allocated. And secondly, those funds are so expensive that we've actually got a view as a firm that non-core real estate, you don't end up earning that much more after the fees that are applied on those funds. So we see this as a low fee, moderate enhancement to returns. And in your situation as well, where you've got cash coming into the portfolio that needs to get put to work, this will just allow you to get that put to work much more efficiently at higher rates of return. So I know Garrett's there from IDR. He's going to go more into the details of how this actually works, but just wanted to give you our framing perspective around why we think this makes sense for your portfolio.
Yeah, Garrett, we'll hand it over to you and walk us through.
Sure. So, Mr. Governor, thank you for having me today. Little fact, I'm from Cleveland, and it's warmer here today than Cleveland. So thanks for having me again. When
Should have been here this weekend.
I saw that, it was colder here. I thought I'd spend a few minutes when, as Frank mentioned, when you originally added us to your portfolio, it was virtual a few years ago. So I thought I'd just spend a few minutes, on the firm and what we do and why we're doing what we do. And then we'll kind of jump into the details of that. Sounds good. And I'm not sure what page, Frank.
29.
So our whole business was built and seeded to provide private markets indexing capabilities. It didn't exist before we started doing this. Our partner, USA, the insurance company, originally seeded us about 8 years ago to start this strategy. So it wasn't available before. It's really a function of a couple things. One, I think the market has evolved in a number of ways for scale. And two, I think it really evolved because investors needed a more efficient solution, lower cost, broader access, and diversification. Our business is pretty unique. We actually have patents for how we index private markets and private real estate in particular. This gives us a lot of information. So we'll talk more about when we add leverage and why, but this really lets us understand the market, where returns are coming from, how they're being delivered by the underlying real estate. And that really helps inform us, right, as to when we want to add leverage and when we want to take it back. So we'll talk more about that. But, we really believe this is a very innovative solution for private markets and just a continuing evolution of, finding better risk-adjusted returns. On the next page, give you a little sense of our firm history and growth. This is 3Q. I was telling Frank we're actually over $10 billion in AUM today as of fourth quarter. The strategy continues to gain momentum. Although, real estate's been a tough place to be for the last few years, in commercial real estate specifically. So you're in good hands with a lot of like-minded investors such as yourself. Next page, just to give you a sense of who we are. We're a pretty efficient team, and that's what lets us keep costs low. So we have about a dozen people in our business. Angela on the left is our CFO. Brian and John work with me on portfolio analytics. And effectively, this is the main team that kind of interacts with, your investment staff on a day-to-day basis. One more page, our track record. So our job is to track the NCREIF Odyssey Index. That's the preeminent real estate index used by a majority of institutional investors in the U.S. Core real estate, so we own 21 open-ended real estate funds, which own close to $300 billion of real estate. Commercial real estate is the underlying driver of these returns here. And you can see our fund tracks that index net of fee. So after all fees and expenses, you get similar, if not slightly better return. You can certainly, many people have picked single funds, and they can provide excess return or underperformance. We believe this kind of gives you a core stability in your portfolio. Index return. And certainly, Frank and others will invest around that for other types of return. But this is what allows us to then leverage up that portfolio. We're not taking asset risk. We're so diversified with thousands of assets, commercial assets and leases, that when we leverage, we're not taking individual real estate risk. So I'll spend a minute on that and what and why we think this is a great solution. First, we have done this before. We did a beta program with two of our largest state pensions, over $2 billion of assets in those portfolios. When we started the program, real estate was doing really well in 2020, 21, 22. So we added leverage and it produced for those clients over 600 basis points of excess return to the benchmark. Okay. And that's what gave us the view that this makes sense for a broader range of clients. We subsequently were also able to delever that portfolio very effectively and in time for this real estate cycle that came through in 2023 and almost to today, right? So we do have experience doing this, and the feedback we kept getting from clients was, will you add this for us? Will you do this? We believe we're getting toward the end of a cycle. Will you do this for us? Frank's been great in working with us to add this, solution. That one. So as we come out of this next cycle, fundamentally, and this was kind of mentioned, if you go up the risk spectrum, you generally have to share fees or profits, and those come out in fees. So when you hire a manager to do a higher return strategy, they generally draw that money down over time. And then they say, hey, if we make a 20% return, we want 20% of those profits. Great. Heads, I win, right? Heads, you win too. But if there's no return, it's just tails, you lose, right? You don't share profits because there are none. This strategy lets you capture that upside without sharing in profits. Okay, so there's no promote, as we call it, and we believe that saves you at least 150, if not 200 basis points of return through the cycle. 20% of profits, right? So
Just Caitlin, I think we're on page 33.
Oh, I'm sorry. Thank you. Oh, yeah, perfect. So I think a key piece of this is the portfolio is very low levered today. It's about 27% LTV at the asset level. We want to move that up, but we wouldn't move it up over 40% LTV. And if you think about that, when you buy a house, you're actually 80% LTV, right? You put 20% down and you're 80% levered. So we're almost the exact opposite.
That means we have a lot of cash flow and a lot of current income. And so when we borrow, that cost of borrowing around 150 to 250 basis points is more than covered by the cash flow we're generating, about 4 times. So there's very little risk that the amount of cash flow we're generating could go down to a point where we couldn't pay those interest payments. We certainly monitor that, and we have a whole process where we're looking at this quarterly positions, monitor the cost daily. And so, as we work through this with Frank, we would have discretion to add leverage and take it off. We will work with staff to keep them up to date, as we want to add leverage and as we're pulling it back. But we believe that, this is an effective way to add about 150 basis points of return to your real estate holdings, with marginally more risk to that portfolio. I'm going to pause there. I went kind of fast because, but
we've got some more slides in the appendix that we can jump to for data points, but what questions does the board have?
Anybody have a question? One, I think this is important. So once we're all, yes, we're increasing risk. That's part of it. It's not like it's high risk. We're not moving from, low risk. 40% is a good example. Plus, you have individual investment risk in this space, but what you're really, our mainstream of revenue in North Dakota is counter-cyclical. So if this goes really badly, for whatever reason, culture shock, 2010, some version of that, our other stuff is going to be doing very, very well. So it is a pretty interesting and all in all moderate risk conversion to gain when everything's just kind of treading water, $62 oil, medium interest rates, everybody's playing around, kicking the tires, nobody's getting real excited one way or the other.
And I think, Frank,
That's not really a question.
yeah,
That's the layman's version of reading all of this and being able to explain it to people who don't do this every single day.
yeah, I think Frank said it to me pretty succinctly, and I know Josh, if you want to try to get more, squeeze a little more out of your real estate portfolio, you have 2 options. You can buy riskier assets, or you can put a little leverage on the high quality assets. And that's what this strategy would be, that second one.
look, it's very well said. We just, we certainly don't want to be flippant about risk in that,
No, and I mean,
right. But
you sit down and you do all of this stuff, you talk about raising your risk profile, and because if you have no risk profile, you have no return.
exactly.
It's a checking account.
Yes. In practice, we believe we're barely moving your risk profile, and we're giving you significantly more return by doing it.
With modeling after the Odyssey, are you modeling it both in terms of the property type and also the geographic diversification? So kind of you have it in the appendix, the Odyssey is being 51% east, south, and 47 west, a couple percent Midwest. Are you kind of tracking that similarly as well?
Oh, absolutely. Yeah. And it's really showing you where the path of growth is right in the country. And
Caitlin, pull up slide 47.
We like Midwest, so I was okay if you guys go a little more concentration now, but
the same from it.
Ohio is kind of on the edge. I understand. That debate with my wife often. Akron, they're in the Midwest.
You know what we don't have in North Dakota? Rock and Roll Hall of Fame. Just that's true.
So we have a lot more industrial and residential exposure these days in the index, and conversely our fund. Office is just getting used a lot differently these days, and so a lot less of it. I think commercial real estate goes through cycles. They tend to be very clustered. We've really only had 3 downturns in the last 40 years. So today we're sitting with values.
One of them was real bad though.
Yeah, for everyone, for everything, right? So today values are down about 25% overall in commercial real estate. Which is why we're asking and coming for this opportunity today, because we do believe there's going to be a pretty interesting opportunity coming on the other side.
Gobble things up.
How cold do you think you'd be right now if I hadn't saved you from outside?
I may not be here.
Yeah.
I wouldn't.
All heroes wear capes.
I know, it was there. I swept in, and in a moment, I made a decision.
Guess I didn't look too.
I could spot a straggler. Like, that man is locked out of this building. He doesn't have a coat on. He's not prepared for this.
What are the questions?
Any other questions?
Let me point to a couple of slides that I think are good to highlight with regard to risk management. Slide 41 shows the drawdown scenarios. So, if the Odyssey index is down 15% with leverage, we would be down 20%. The strategy would target 25% leverage. So we would incrementally, be further down. The mandate would allow up to a maximum of 30% leverage. And so if it got to that point, then they would start paying down the leverage in a drawdown scenario. So we've looked at the numbers. You can see there the 39% max drawdown. That's the 2008 financial crisis scenario. And then on the next page, slide 42, shows those similar stress testing periods. And so it shows the savings and loan crisis, the great financial crisis, and this current cycle, which would be down, 20% this cycle. I think another important slide to highlight with regard to risk management, on our slide 36, shows those different risk profiles on the volatility curve there. So we're at the bottom left there at core, and 27% LTV with a quarter turn of leverage on top would bring us closer to 40% LTV, which is around that core plus range. So we're still a lot lower LTV compared to what you typically see at like up to 80% in opportunistic.
And can you just refresh the board on the difference between like core plus, value add, and opportunistic, so they understand the different types of properties? And maybe you're for that.
So core is like fully leased Class A office building. Core plus might be, something that might need minor improvements, with, opportunities to increase rents. Value add might be like a fix and flip, full renovation, and then opportunistic would be distressed or like fully ground up development, which is more speculative. And then just the next slide, 37, shows the risk profile of private real estate versus other asset classes. So if you remember, we have the bond overlay that allows us to use leverage in core bonds. That's the lowest risk profile asset class. Private real estate is just a little higher volatility than that, but you can see still much lower volatility relative to stocks and publicly traded REITs.
And private is core. That's the benchmark we're using.
So after viewing all the risk profiles, the amount of leverage we think is still moderate. What other questions?
Sounds like a nothing to something risk adjustment.
Yeah.
Thank you, guys. Appreciate the thoughtful description.
Well,
Nothing to moderate. It's still very marginal something. Yeah.
we can jump back to slide 19 and I'll ask the board for a motion. Yeah.
And Mr. Chairman, I'd be happy to move to recommend that the board approve full account value, 386 million toggle between IDR core property index class A, unlevered class B levered at the discretion of IDR investment management, subject to standard review and legal documentation.
Second.
Discussion. Roll call.
Superintendent Bachmeyer,
Yes.
Treasurer Beadle,
Yes.
Attorney General Wrigley,
Yes.
Armstrong.
Yes.
Thank you.
All right, thank you.
Thank you. Glad you made it in from the parking lot.
Thank you, Josh.
Works out well.
Thank you. If I can figure out how to get back.
Well, don't let you out of the building anywhere.
Figure out how to use
Yeah.
the defensive coordinator now that the new head coach and Jim Forts now is like, I'm gonna peace out and leave, and Miles Garrison, you can leave now too, so.
I think I'm,
Special projects, Joe.
All right.
Not that I'm moving on.
I'm going to hand it up to our director, Chris Selsley, who can kind of set the table here and introduce our guests.
Let's get on.
Morning, Governor Armstrong, members of the board.
Pretty excited about the timber rights.
We've got some timberland up in Botno still. We probably could get rid of too. Maybe we can exchange that with the feds. The Minerals Department did an RFP last year as our time was up with our current contract. So efficient markets, or Energy Net as they were once known, had been our provider for quite some time, and we've had great success with them. And they won the contract again. So I thought it would be a good time, especially with new members on the board, to do kind of a rundown and show how our process works and how our leasing in North Dakota might be a little bit different from what's going on in other states. And so with me here today, Gus Rivero and Tate Smith, and they'll take you through efficient markets and what they do. And we've enjoyed a really successful partnership with them over the last 15 years. We were the first client. So take it away.
Thank you so much, Mr. Governor, members of the board. We appreciate the opportunity to talk about our company and services. We describe ourselves as a tech-enabled marketing and auction platform. We serve the private sector and public sector with sales, lease auctions of oil and gas, real estate, mining, alternative energy, a plethora of other commodities. But moving on to the next slide. We've been in business since 1999, and when it comes down to government agencies, we serve 34, and we have helped state trust lands and the BLM raised over $4 billion and have leased over 80 million acres for them. On the next slide, please. We were founded in 1999, as Chris mentioned, as under the name Energy Net, and the idea back then was to auction oil and gas properties online. Before this, our website existed, you had to fly down to Houston to a hotel ballroom for a 2-day event. Day one, you review due diligence for the oil and gas properties that will be for sale the next day. And the next day, you participate in an oral auction. And that had a lot of friction. Typically, right before the auction, they'll announce that certain property was Wilbur only, and now all the research you did was thrown away. And of course, if you lost, you wasted 2 days and you came back empty-handed. So our founders thought it was the boom of eBay. They said, why don't we make an eBay of oil and gas properties? It was an absolute ludicrous proposition when we took that idea to the market. Very people wanted to use us, but we kept chipping away. After the dot-com crash, we were the only website standing doing auctions for oil and gas property, and we got really good traction. By the year 2025, we were selling hundreds of millions of dollars on oil and gas properties in the private sector. And we thought we had something special, had to take it to the next level. And we figured, why don't we go knock on the door of governments that offer oil and gas leasing publicly? One of those states was the state of North Dakota. Took us about 6 years to figure out how to get in the door. We discovered that government agencies have very strict rules and regulations, so we couldn't tell you, hey, it's a contract for you to sign. We have to make our services be as customizable as possible to meet all your regulations. In 2011, we signed our first contract with the state of North Dakota, then came Utah, then Colorado. And in the year 2015, we successfully amended the Federal Leasing Act of 1958 to allow the BLM to auction their oil and gas leases. And by the year 2018, we continued to grow our service to the private sector. But that year was the first year where we sold $1 billion of oil and gas leases in a calendar year. So once again, we were at a crossroad where we thought we were seeing on something special, and we wanted to take it to the next level. We took a very hard look at our processes and discovered that the way we were about creating the competition or doing our auctions, doing our marketing outreach, that was commodity agnostic. We could have exchanged the oil and gas lease with another commodity and the process will stand. So we started teaching our government clients, hey, you offer more than just oil and gas leases to the public. Some competitively, some not, but we could make it competitive through our platform. It took a few years, but by the year 2020, we were offering 30 plus different commodities on our tech-enabled platform. Fast forward to 2024, we had from 2020 to 2024, we have those buyers of other commodities on our website kept telling us, hey, can you sell my real estate property like you offer real estate property for governments? And we kept telling them no for many years. We thought, listen, we're at a crossroad, but this time the decision to take it to the next level is very easy. Clients are asking us to do it. We need to do it. So we form efficient markets to better represent what we do. So we left behind the name EnergyNet. Moving on to the next slide. Our service offerings. As a result of working with government agencies for now 15 years, we are at a point where we've seen many ways, many regulations of many states, and we're able to provide a service to you guys that meets all your requirements, that hopefully lowers your overhead and makes your life easier. We do a lot of marketing work. We call ourselves an auction and marketing platform because a lot of our work goes into outreach, making sure everybody's aware and is ready to compete for those properties. We hold auctions, seal bids, and requests for proposals for government agencies. Every agency have different requirements on how their public lands need to be offered to the public, and we can accommodate them all. Moving up to the next slide. Nowadays, in our platform, you can find still oil and gas is the cornerstone for platform, but you can find real estate, renewable energy, hard minerals, water, carbon capture, timber rights, everything that a government agency would offer publicly can be offered through our website. We close about 5,000 transactions every year across all these types of commodities. Moving on to the next slide, just to show some of our clients. We serve the BLM, Lower 48, and Alaska, and of course, the great state of North Dakota, among many others. A lot of our clients have been with us for more than 10 years. Moving to the next slide, this one is an important one for me to show because we are the only marketplace where you have a private and public sector integration. And these companies you see there, a lot of them, those are transactions we hosted for them here in North Dakota. So, you know, when these folks are very smart and careful with their money, when they have a property for sale, they'll come to us. That is really good for our government clients because it means that these folks know exactly just how broad and aggressive our marketing is every time we have to sell one of their properties. So when they come to look at state of North Dakota's oil and gas lease sale, they understand that we're going all out and there's no room for speculative bids. They have to bring their best number to the table or they will not be able to compete. But this is just a small sample. We sell about $1 billion every year in the private sector for oil and gas properties, all the way from publicly traded companies, privately owned regional E&Ps, and smaller outfits as well. Moving on to the next slide, just a snapshot of our numbers of serving government agencies. The most important here is that every year we host about 65 to 70 government offerings. Some of them have just a handful of tracks, some of them have hundreds. But our platform is the one and only place where you can find state governments and the BLM offering natural resources to the public. Moving on to the next slide, just to go into how we do what we do, I'd like to tell you that we are successful because we're very good looking and people want to do business with us. That's not the case. We have to work ourselves to the bone. Nowadays, every service uses AI and machine learning. And if you're going to use a service that does not have that component, you're not going to look at it. We've been using machine learning models since before it was a buzzword. We've been using machine learning models since the mid-2000s. We have so many transactions that come to our platform. We have so much intelligence. But think about that. We not only know who won the bid, we also know who lost. We know who viewed and didn't read, and we know why. So we have built these investment profiles that are proprietary to us. We don't share them with anybody. So we know exactly when we have a property coming to the market, who will be the most likely buyer. Of course, it's the future, so we have cutting edge technologies to data mine news articles and publications. We are very well aware when mergers and acquisitions occur, and all that data is put together with our business intelligence. And then last but not least, we have experts that curate the data. AI is an amazing tool. Machine learning models are amazing, but they cannot beat the knowledge of someone that's been in the industry for 20 years. They can tell you in 1 second what AI got right and what go wrong. I'm sure everybody uses ChatGPT, and when you ask ChatGPT to write something on a topic you're very well vested, okay, I have to make changes. And when you make him do something that you're not super well vested, you think, oh, maybe it looks right. But if you knew about it, you know that you need additional changes. But moving to our next slide, before we get to the main point of our presentation, who are our clients? They're Fortune 500 companies, institutional buyers, family offices. A lot of the investors on our platform are not Googleable. You can't just go and find them, but all the companies you would expect there to be are there. We have about 15,000 monthly visits from unique investors on our website. There's about 50,000 accounts that are ready to be. Before we take a bid from someone online, we pre-approve them financially. That means that we talk to their bank or private equity provider, and we say the maximum they can bid. If you add up that pre-approved allowance, it gets to $25 billion. We're getting to the next slide. This is the main point that we wanted to share with you. By virtue of serving all these government agencies with their oil and gas leases, we created this table. I'll let Tate present it, but essentially it's calling out the difference in the process, what's good and what's not. There is a lot of duality here. There is not always a clear-cut path to success, but I'll turn it over to Tate.
Thanks, Governor, members of the board. This, like I said, this table shows you a summary of all the key leasing points across the states and west that we serve. And the take-home message here that we want to present is, and as we work with agencies, we see the most success when there's the most optionality in the scenario. And so, like I said, there is no silver bullet. There's no state out there that's got it absolutely perfect every single time. And all of these leasing terms and figures are done within the context of that own state's history, right? Their own legal framework. You've probably even got some personalities at play in the number or two on this slide. And more importantly, the resource drives the terms and the numbers you see. But in each of these columns here, there's some good things to point out. In lease terms, you see most states have 5 or 3 years, with only Alaska and BLM having a full decade on that primary term. And specifically in lease term, you look at Colorado, North Dakota, Wyoming, you get that 5-year primary term with the option given certain circumstances being met. And so it allows the agency as a fiduciary to make that decision with their operator. Maybe there is a circumstance where you just need an extra 5 months and we're into a royalty producing condition, which is the goal. So great solution there. You look at the royalty, the different states have wide differences all the way from 12.5% to 25% in New Mexico. But the point, the great example that North Dakota leads with in terms of royalty is the geographically based royalty. So you have 18 3/4 in certain geographies and counties. You have the 16 2/3 in others. And this is such a great model, even that New Mexico chose to adopt the same practice in their state, where in Chavez, Lee, and Eddy counties down in the Permian, they're best rock. They get 25% market rate. In the rest of the state, they get 20%. And that's a more economical royalty rate for those more unproven areas or less economical. And so, again, fantastic optionality to base your lease terms on the resource value. Over on bidding methodology, Gus was talking about the different rules and regulations and statutes that govern the way that we manage land, and every state is different. What we find is most states have some language that say, leases must be given competitively or via an auction, and luckily that gives us the ability to the agency the ability to say, is that live auction, is that sealed bid, and you can see their agencies go either way. But one example of really leveraging that option recently in the last year or two, Wyoming elected to select certain parcels to be sealed bid in their live bid auctions. And so they run 3 auctions a year, about 200 parcels every auction, and they've picked 20 to 30 parcels to be offered sealed bid. And what we have found is in the parcels in those areas where it's likely to be maybe one bidder, right? It's maybe an unknown area. It's lower unknown resource. You've got one bidder maybe nominated it. If they come to a live auction, they're just going to have to pay minimum because nobody else is showing up. But in a sealed bid, there's an unknown factor of how much competition may show up. And so they have to hedge against that. So in a situation where you're getting $1 per acre, now in a sealed bid scenario, you're getting maybe 3, 5. That's meaningful. That's meaningful, especially when you do it at scale. We also see it in spots we've demonstrated over the last few sales in Wyoming. If you incorporate sealed bid parcels amongst some other live bid parcels, there's this sort of tension between price discovery and then that unknown competition factor. And so you're able to pair the different offering methods to garner more revenue generation out of your auctions. And then finally, we wanted to talk about pew clauses. You can see 5 states on this list have some clause, and if anybody's unfamiliar, a pew clause is a function in the lease where when a certain time frame is hit or certain development milestones are hit or not hit, the lease contracts to that producing acreage horizontally by formation or vertically by whatever acreage is being produced. And in this column, we wanted to specifically point out Colorado's pew clause. Colorado has the ability, the lessee, the agency has the discretion to enforce their pew clause. The rest of them have some sort of trigger that automatically contracts the lease, but Colorado has the discretion. They have the may in their lease term, and they may contract it vertically or horizontally or both, which is really a great tactic and tool to have as you're working with those operators in certain situations. Maybe you want to cycle that acreage back to the market and get the bonus again, get it out there, get another developer. Let's get more wells in the ground. Or maybe it's like when we're working on an extension. There's a situation that warrants not invoking that pew clause. And so there's some really great options out there to look at different languages, and if as agencies are considering what lease terms should we be writing into our lease, what rules and regulations should we be considering, what statutes maybe should we be proposing. there's great options out there for the agency to have flexibility in their land management so they can have the most power and in their decision making as a fiduciary. So happy to answer any questions on this slide or bring it back to Gus and on the rest of the deck. This is our last slide here. Awesome.
Mr. Governor, members of the board, one last point we want to make and try to make this as less sleepy as possible. Hopefully we succeeded. That working with other government agencies over more than 15 years, we picked up a lot of lessons and we were able to advise New Mexico to look at what North Dakota was doing. There is a lot of things that every agency does very well, and there is always a harsh constraint for resources and time. Another thing that New Mexico does well is compliance. So they have really good positions in the Permian Basin, but acreage is finite. Eventually,
Well, most of it's federal.
a lot of it is federal.
So their state land, if you just take us, I don't know what the average is per spacing unit in New Mexico, but it's
Almost.
significantly different than up here, right? Like their acreage out their state-owned land in large tract federal permit.
And they have been working hard in exercising their right to compliance, and they've taken some leases back. And through last year, the state of New Mexico saw close to $500 million in oil and gas lease sales. About half of that came from leases that they took from their compliance work. And something else that we've been working with government agencies here lately is we mentioned we do auctions, CLB, and requests for proposals. A good example to bring up on requests for proposals is we've been working with the state of Colorado since 2013, and we know that they wanted to have a geothermal resource developed in the state. They have no geothermal resources. And while this is about geothermal, just I invite you to consider that the commodity or the resource could be exchanged here. They've been working to create lease terms and rules and regulations around geothermal for some time, but could never get there. So we made the proposition of holding a request for proposals and ask the geothermal industry to submit proposals on what they need in order to develop projects. We took that to the market for about 60 days. We closed the request for proposals in December and resulted in 21 proposals. Whether or not the state of Colorado will pick one up and take it to completion, that remains to be seen, but at least they collected a plethora of information from the private sector itself that gives them guidance on policy. Typically, policy is not fleshed out due to political differences or lack of resources, but now they have a clear communication from the private sector of what they want to see in order to develop. And that system can be applied to any other type of resource, whether it is known or unknown. If there is any resource in the state that you're looking to have developed, or you wonder, could it be developed? We could simply create a request for proposal and invite that market segment, whether it is rare earth, minerals, carbon capture, anything that you're targeting. We could invite them to submit a proposal and have them describe to you what is like they would like to see in order to come make the investment. But we appreciate your time very much this morning. We try to be brief, to not bore you. If it was boring, at least tonight, think back on this and then fall asleep quicker.
I mean, the vertical pew clause is interesting. The problem is it only really works. I mean, for us, it would be Bakken, non-Bakken. I think I probably wrote the first vertical pew clause in North Dakota because I was trying to drill a lodgepole well, and my mineral owners wanted Bakken prices, and I'm like, how about I let you keep the Bakken? Yeah, because I don't want to lease the Bakken. I want to lease the lodgepole. The problem is right, it only works if the acreage around your state section also has the ability to go in and get the vertical pew, right? Because just pick somewhere western part of McKinsey County, they're all leasing Bakken, right? Doesn't matter if it's Core, DOG, Continental, they're all leasing the Bakken. But there are guys out there that would like to at least speculate on Lodgepole, Red River, I mean, different areas. We could do that and they could nominate that. Problem is right next door to you, Continental leased 640 acres and there's no vertical pew in that 640. So, I mean, I think it's interesting. Because you do, right? You do Bakken at 1875. We wouldn't have to do it geographically. We do it vertically. Lease anything else at 16.67, right? And figure out if we can get some guys. Like Cobra comes to mind, but there's a lot of guys out there. Bob Mao, I mean, they do all of this. But be interesting to see if there was a way in which to do that.
Yeah, and we've had a lot of bifurcation of our leases. People selling off some of the shallower stuff. So we've seen it happen. You know, they will be willing to sell portions. Like a lot of the companies told me when I was doing private stuff, I don't care what you do with the other stuff. I'll let you put whatever pew clause you want in it because I only want Bakken and
Correct. And the other answer is those small guys get the data if they work out the right deal. Like they get the data, so they don't have to go back in and do all of that. They get core testing, they get all of the other stuff on the front end. It's how you figure out what's next after the Bakken.
And we've seen some, in the last auction and the upcoming auction, we're seeing some different areas that they're not targeting Bakken. They're doing some other stuff, and so we've got these, and I want to encourage them to do that.
The structural problem's the guts, right?
Right.
The guts is all leased. It's all leased up, and it's really difficult for somebody to come in and say, "Great, you guys are producing Bakken and Three Forks. I'm interested in Red River." And a lot of that's because of just how it works out. It's interesting though.
Yeah.
Mr. Governor, any thoughts on the seal bid methodology? I'll give you some more color. When we host the auctions on our platform, we ask bidders to provide what we call the maximum bid. So, and I'll give you an example. The maximum bid is $10,000 and the bid increment is $1 an acre. The system takes the 10,000, saves them, does not publish them, and bids on behalf of the bidder $1 at a time in order to keep the high bidder status. So if the $1 is challenged, with another $1 goes to 2, so the system bids automatically 3, and so forth. So that means that while that data is confidential, because it's equivalent to you going to an auction and you're raising your hand for the next bid, but in your head, you know the number up to which you're going to raise it. So the maximum bid is the number in your head, essentially. So we approach Wyoming telling them, hey, on these non-core leases, you should plan on, if regulation allows you, do seal bid, because we have the data that when the one bidder showed up, maybe did a $1 bid and had a $10 maximum bid, which is hidden and non-public, and no one knows how much higher they were willing to go. But we have that data. So we encourage them to try it in the non-core acreage. And yeah, maybe it totals to an extra, $100,000, $200,000 per sale, which may not sound like much, but again, they're holding cells 3 times a year from now until the end of time. That amounts to something. So I wonder if you have any thoughts on.
Yeah, I mean, most of our non-core most of our good acreage that comes up, prefer the live auction actually. Yeah. I mean, you're gonna have 3 or 4, for HBP and what you're thinking coming up in the Bakken. I guess I have a different approach on that. When you're starting to look at your non-core acreage, I'm far less concerned about who's taking something east of Dickinson and what we're making on it versus as people start. We talked about it till the cows come home. It's fine, but the Bakken and the Three Forks are moving very, very far into the mature stage of a development. Eventually, there's 2 ways in which oil revenue continues to expand in North Dakota. One, enhanced oil recovery. And we figure out how we deal with the fact that we're leaving 85% of that oil in the rock. And the second is expanding into different formation, utilizing Bakken and Three Forks, Bakken, improved up Bakken and Three Forks technology in different areas and different spaces. I far less personally care about what we're making on the land and how we opportunize the 16.67 or the 18.75. So I haven't thought about, I'm not trying to maximize a speculative lease 20 miles away from the Bakken right now, so much as I'm interested in people figuring out how to go do that. It's one of the reasons, for as much as I love larger companies, consolidation scares me a little bit, right? Like they have shareholders, they have investors. It turns into a mining play significantly more than it turns into an exploration. So I think in the overall scheme of what we deal with in oil revenue, this would be a very, very, very small part of it.
No, I appreciate it. It's still an option if you ever want to explore it, as well as if you have
I would also contend that Colorado might like their regulatory framework, but the industry has sent a very clear message to Colorado how they feel overall about their regulatory framework.
setback rules have been a
I
hot
mean,
button.
that some of that northeastern Colorado acreage is where where they can actually survive their setback law is under development, but for the most part, the industry's left Colorado.
But Mr. Governor and members of the board or what we would like for you to take away is that number one, we're honored to serve the state of North Dakota for 15 years and looking to fulfill our current contract for another 4.5 more years, and that we are connected on multiple industries, and we'll be very happy to put our reach to the benefit of the state and any other industry segment, whether it's developed or theoretical at the time. Thank you so much for your time.
Guys,
Thank you.
I just want to say thanks. Coming in January, and not too far away from either of you, Kansas and Colorado, right? So not too far away, but and we hold 2 auctions a year, and each auction there is months of work that goes into identifying the parcels, working with these fellows here in their company to make sure we have everything properly documented. Bidders and there's a lot of work, and the next one is coming up in March, right?
March 17th through the 24th.
Yep.
And thank you for all you guys do for us. You make it very easy and, no auction's ever easy, but you make it as easy as possible on us. So, yeah.
And Chris has constant communication with them about new ideas and so on. So
Yeah.
if they come up with something that we think is a proposal to bring forward, we can do that too with a new idea. So
Absolutely. I'm hoping we can expand what we do on trust lands with alternative energy or alternative resources, and how we can, like us, that we can start to build that framework and think that could help us in the future, like we saw with critical and rare earth minerals. I think we could still possibly do something in that space, or carbon capture, that might benefit the state of North Dakota in the future.
Okay, so thank you guys.
thank you.
Thanks, guys. All right. I saw Phil. Is he still here? Oh, there's Phil.
Yeah. Well, I'll move on to the litigation update. Then we have a recommendation to go into executive session, but if you go to the litigation update, that's on page 72. So the first case there, the MHA versus U.S. Department of Interior. We did have a development there. We had been waiting for the court to make their summary judgment motion for quite a while. And they finally did issue it on January 6th. The court issued an opinion and order denying both motions for summary judgment. So basically both parties were asking the court to decide the case right there and say,
both parties being the U.S. and the tribe. The state was saying, don't decide summary judgment.
correct. Yep. Thanks for that clarification. The tribe and the federal government were asking the court to make a decision on the merits before we were able to go have a full trial. She denied that, and we think had some pretty good language in there for the state's position to help support what we've been saying all along. We have Phil, the solicitor for the state, who will talk more about that with us in executive session and strategy going forward there. If we move on to the Leland case, at the top of page 73 is the update there, where we have now, I think there's maybe one more round of briefing, but we're pretty much ending the briefing there. And I know we filed our final brief earlier this week or late last week. We do have oral arguments scheduled before the North Dakota Supreme Court on February 12th, so they're pretty quick on getting their oral arguments. It's much different than working with the federal courts. So we have oral arguments basically in under 2 weeks there. So Zach Pelham will be arguing that case before the court for us, and then Matt Santine, James Wald will be there in support. And the last one is the new addition to this one, and this is where we've been informing the board about. We have the Continental Interpleader decision that dealt with the ruling where federal lands abut the state ordinary high water mark, and what law controls to determine where federal lands abut federal or state law. And that case dealt with a few specific parcels only. So we had been in communication with the federal government about trying to use that case law to settle areas throughout the rest of the river. We weren't able to achieve that, so we ended up filing quiet title action to try to move that along. And we're hoping that that'll spur more discussions. If not, we will have to actually go through some more legal proceedings there. But they have 63 days to respond. And I don't know if Phil's actually kind of our lead on that here. So I don't know, Phil, if you want to provide any more context or detail there. So
No, you hit the high points.
Why is it 63 days?
It's 60 days, and then if service is done via mail, you get 3 more
Oh, okay.
days.
So it's 60. I was like, I've never seen 63.
I think the deadline for the federal government is
Feb 18, I believe.
February.
Middle of
18th.
February.
Okay. Yeah. So. Any questions on those? That would be the end of it. If there's no questions on those cases and public session here, that would be the end of the public session. And I would recommend that we go into executive to talk further about the MHA case with our council.
Governor, I move that under the authority of the North Dakota Century Code, section 24-04-19.1, 44-04-19.2, the board close the meeting to the public and go into an executive session for the purpose of attorney consultation regarding the MHA litigation versus U.S. Department of the Interior, civil action 20-1918.
Second. Discussion. Roll call.
Superintendent Bachmeyer.
Yes.
Treasurer Beadle.
Yes.
Attorney General Wrigley.
Yes.
Governor Armstrong.
Yes. This executive session will be recorded, and all board members are reminded that discussion during executive session must be limited to the announced purpose for entering into the executive session, which is anticipated to last approximately 20 minutes. Board members, their staff, employees of the Department of Trust Lands, and counsel with the Attorney General staff will remain, but the public is asked to leave the room. The executive session will begin at 10:23 a.m. and will commence with a new audio recording device. When the executive session ends, the board will reconvene in open session. Well, fine.
Open up just in case there's some.
Sure. I can start reading. Okay. The executive session has adjourned at 10:36 a.m. And the public has been invited to return into the meeting room. Board is back in open session. During the executive session, the board consulted with attorneys regarding the specified legal issues. No final action was taken at this time as the result of the executive session. We do not need a vote because we didn't take any action. The next agenda item is the next meeting, which is February 26th. Anything else for the good of the order? No. Sounds like we might not have a meeting in March, just so everybody's aware. I have massive scheduling problems and I don't want to ping pong around all your schedules unless Joe says we absolutely have to have a meeting in March, and then we will figure something out.
Right now, I think we're not gonna have a meeting in March.
Which means February may be a little longer.
I don't know yet.
Okay,
Depends on what.
but I mean,
Yeah.
I would
I
just,
think actually our
just to
investment,
be safe, let's take the February and everybody block off the morning on the 26th. And if not, you'll have free time on your calendars.
well, not when is the, just in case anybody's going, the United Way lunch starts at 11:30. Yeah. I don't think it should go.
Yeah.
Not with the way that the government runs the meetings.
This meeting is adjourned.